The deal room.
Thank you guys for tuning in with us this evening. This evening we are going to, really delve into the Fed rate cut situation. Plus, we're going to try to do like a 1 hour segment layout that you could actually that we're going to just dive into some of the other programs that the government has that's going to really affect our business for the end of the fourth quarter, and we think for the majority of the first quarter. Easy, clear breakdown for what we're going to dive into is the Fed rate cut. What actually happened, why, and what it means for everybody else. Okay? Now, Joe, I know that you wanted to speak about, just the rate cuts that just recently happened and how that's really going to affect, just average Americans. What do you think?
So they dropped the rates a quarter point, and actually, amongst the Federal Reserve, it was the most dissent that they've had since 2019. So three people didn't agree. Like, it wasn't unanimous. Even the Fed is worried about lowering rates because inflation's so high. Issues with unemployment. We haven't seen job reports since September. So it's hard to find the balance to lower rates when at the same time inflation's kind of not, under control right now. And apparently they're saying there might be only one rate cut next year. So Trump isn't too happy about that. He wants to lower rates. He wants to jumpstart the economy again. So, it's a lot of other factors at play here. But, rates have been dropping on our end with mortgages a little bit, like consistently the last few months. It may slow down, but definitely a lot more action, a lot more clients reaching out to us, a lot more deals taking place now because people a little more confident going into deals, knowing that principal and interest payment won't be as high. So.
Now, question for you, and then I'm gonna toss it over to Stanley. As far as rates being cut, because obviously we're privy to it because we're in the space, right? But to the average American that doesn't really watch the news or has a flip phone that has no idea about it, what's like a certain caveat that we would try to reach out to them for to try to go ahead and get them to do business with us? Like what is your pitch going to be to inform them if they don't really know right now that rates are dropping?
Well, I'll let my clients know. Like, rates have dropped on 30-year mortgages. Even, credit card interest rates will drop a little bit as well for business financing. We do business credit cards, lines of credit. Those interest rates could drop as well. But I would also let the clients know, don't expect a huge drop because a lot of people sit on the sidelines, Stanley, on the mortgage side, people miss out on equity because they're afraid to move forward. Like, I'm going to wait till the rates drop. So the Fed said they're only going to cut rates maybe once next year. So the rates might be a little steady for a while. They're going to see what transpires in the next couple months to really, decide what's going to happen next. So don't expect rates to be what they used to be. A lot of people are stuck in the past. They think it's COVID again. They're going to get a
crazy low rate.
Yeah,
or something like that, right?
So this might be it for a while. So don't miss out on deals when you have a great deal in front of you and you're just hoping and wishing for a rate that's not going to come.
So now, Stanley, with the rates dropping like a 0.5%, I don't know, is that really is that monumental? Does that mean that everybody should just run and start buying now? Is that what it means, or should people wait? Because just like Joe said, they said that rates aren't really going to get cut for another while, right? Like at least until the end of like the third quarter next year that they're thinking about.
Yeah, even if they do, it won't be like they've dropped rates consecutively a quarter point over. And so, the Fed is saying that they're not going to do it because we have to get inflation under control. So.
What do you think, Stanley? Do you think so the recent rate drop, do you think that's like a cue to buy now, to get into deals now? Or do you think people are still smart if they don't just jump right into it head first?
It really comes from perspective. If we're talking in a sense of fund raw capital, it's a great time to be alive, right? Cheaper money allows you more leverage. If you have rental properties, now you should be cash flowing even sooner because less will be going towards your monthly obligation. If you're looking, this is a great time to pull money out of real estate to acquire more assets. If you're looking at business lending, the capital is cheaper now. So when you're looking at opportunity, you're getting business credit, business lines of credit your money stretches longer. So I don't think the key word is when it comes to real estate. I don't think it's real estate or business lending. What this does is open more opportunities. So when you borrow money, let's say at 9%, but now something's more attractive when you're only paying 6%. Or on the business lending side, it's more attractive when you're paying the promotional 2.9%, 99% versus 11. So it goes down perspective. Now, when we look at the economy itself, I always say there's no good or bad economy in America. There's just different opportunities. And when I say this, when the market's doing bad, cash is king. Because a business can go bad, but the person that has the money can afford to buy it at a discount. Same thing goes for stocks. When the market's doing bad, everyone's like, oh, the market's doing bad. Real money says, I'm going to buy this stock at a discount because you know the company's solid, the fundamentals. And one of the greatest movies out there, if you look at Wall Street, even Boiler Room, they tell you these companies, they buy off fundamentals. They're like, the stock's down, but the balance sheet is solid. So real Warren Buffett's, the Bill Gates go, listen, they're sitting on cash. I'm going to buy that stock when everyone else gets scared. Same thing with real estate. Everyone gets scared. Oh, the market. Real money goes, it's a house. People still need to rent. Markets like New York, Detroit, California, they do not have enough housing for people that live in that state. If you go to Chicago, Florida, they don't have enough housing for people that live in that state. So the question is, do I buy that house that decreased 10%? Hell yeah. At a lower capital because of the rate cuts. It's an opportunity. Don't factor the rate. People that rate watch lose opportunities.
Yeah, because they're always trying to wait for the perfect scenario that might not come. Just like you said, people were waiting. Feel like people got, sorry to cut you off, but people that got certain rates during the pandemic, during the bandemic, they really think that times are gonna go back to that. Not even understanding that was a worldwide disaster. You know what I mean? It's probably never gonna happen again in our lifetime.
That's why, corporations and LLCs are buying more properties than, individual people at this
BlackRock. BlackRock's infamous right now.
Yeah, they're buying up the properties. They're not afraid.
If you don't believe the power of real estate, follow the big money. They're buying 100 houses at a clip at numbers that people don't even make sense. It's because they know that corporation's going to be here for another 10, 20, 30 years. They don't care about the price they're paying. They're going to make it on the long run on the rental income, moving the average Joe out of home ownership and making you a permanent tenant. That's why real estate is an asset you never sell. You inherit it, you figure out how to keep it.
Now, Stanley, one thing that I know everybody wants to know is, does the rate cut necessarily make housing affordable again?
That's a double-edged sword. Because in one sense, if I only qualified for 100,000 at 8%, now I could qualify for 150 at, let's say, 3%. So in that logic, yes.
Yeah.
But you're forgetting that everyone else's rate dropped also. So now you're not competing with the person that qualified at a higher dollar amount. You're also competing with the same people you're competing with before.
Yeah.
It doesn't change. You saw during COVID, every open house, there was a line around the corner.
Yeah.
So when you were like, oh, honey, let's go buy. And then you pull up to the house and you're like, hold on.
50 people outside and you're the last to the party. Yeah.
Yeah. So, and then people start pulling out the market because they're like, I'm done going to open houses and never winning anything.
It's saturated. It's too saturated. Why am I going to leave my home?
So much capital is available.
And then people just keep outbidding each other and people end up paying over asking. One of my close friends, we actually did close on the property. It was another property, but we kept maybe 6 open houses he went to, made an offer, and then one house was worth $750. He put an offer of $800. We thought we were good. And he got outbid. Someone offered $900K for this house that's really worth $750. So
there's a lot of money out there. People don't understand. There's a lot of money out there.
Well, and again, I'm not like a real estate guy, but is it really true that sometimes when builders really can't keep up with the demand, that's really when investors try their best to jump back in aggressively? Is that really the same caveat, or does that really not make sense?
The builders,
Go ahead,
Well,
Joe.
I was gonna say, if it's the supply is scarce and there's not a lot of new homes going up, then the people in the game know, like, okay, it's important to buy these houses. Like the value will jump up in the future. There's not many houses being built in general, so there'll always be a demand, but the supply is low. So now that asset is worth more.
Now, does and I know we're listen, ladies and gentlemen out there, if you guys are not really into real estate or the mortgages, anything like that, trust me, I'm not really into it as well. But I got the two mortgage gurus up here, so I got to kind of feed them a little bit, and I'm also trying to learn at the in the same breath. So
But that's incorrect. Everybody should be in real estate.
okay.
If you're buying your first home, that's a real estate transaction. If your parents own a home you're gonna inherit, that's a real estate transaction. If you have a kid and get married, everything's a real estate transaction. It's the core of the American dream. Understand something. The reason I got into real estate is because there's three basic things a human needs: food, clothing, and shelter. I finance one of them, which is homes. So I'm always going to make money. So because I know that, every American will either shoot to buy a home or rent in one. So you make the decision. Do you own the home or are you just a tenant? But real estate is still there during that transaction.
Why do I feel like you rehearsed that line? Because that was that was way too smooth, bro. That was my beats, but you Randall, clip that. And you looked into the camera and everything, bro. That was fine. That was fine. No, but what I so you know what? You're right. I should know about everybody should know about real estate transactions because not only that, Stanley, I heard that there is not one American millionaire that doesn't have real estate a part of their portfolio. Stanley. So yeah, no worries. I heard that every millionaire that's in America has real estate in some part of their portfolio, or that's a part of their revenue stream. That is true. So
I believe that.
So I should know and learn about real estate. You're absolutely correct.
Even when it comes to business financing, a lot of these people may own the building that their business operates out of. So,
Yeah.
Correct.
Sometimes we can't get them that line of credit or that term loan or, the MCA is not enough. But it's like, hey, you own that property, you got equity. Like those deals turn into real estate deals.
Some of the people some of these business owners that acquire a lot of wealth, and you're like, oh my God. And in New York, at least, you'll see like a 20-unit building, right? And the guy who owns the building is the guy who owns the bar on the main floor, because he was done being a tenant. He's like, you know what? I'm gonna pull my money together. I'm gonna buy the building, and just so his business doesn't pay rent. He didn't think about appreciation of that asset. I know too many business owners in the city that own successful businesses. Don't get me wrong, in their own right, but I'm like, but you own a $3 million building. You must have been a genius. He's like, no, I just didn't want to pay rent for my business. So I bought the building. I have these tenants covering it. So I eliminated expense for my pizzeria or my bar. That was his premise 10, 20, 30 years ago when he bought it for $130,000.
Now it's
worth 3.8, 3.7 million.
And those tenants are still, the rent goes up.
Going up. So what happens?
Rates drop, you refinance.
Exactly. So let's say the day comes, he's done with the pizzeria. His kids don't want it. He shuts it down. He rents that to another pizzeria, now it's sitting cash flowing. Once again, real estate.
But even with a lot of people will come to you for that down payment money. They need a little money for that down payment, that closing costs. Like, I've done it.
Got financing.
Yeah.
Get people lines of credit for that. Get people, even MCAs, people get sometimes.
Well, yeah, because just like Stanley said, so like in the event, like something like that would happen with the guy owns a pizzeria in a building, like that's why you guys also have to ask, do you guys own businesses? You know what I'm saying? Because just because you're a property owner, 9 times out of 10, they probably own some business. You understand what I'm saying? Just like we feel like most business owners on our end, they own some kind of property. At least they live in a house.
Right.
You know what I'm saying? So it definitely goes hand in hand. But one of the things that I wanted to ask you guys is this. Does the rate change have anything to do with builders or like the demand? And the reason why for new construction, reason why I ask that is because I know that lots of people from up here right now, instead of buying homes up here, they're paying to have homes built from scratch in like North Carolina, South Carolina, in the South where it's cheaper, right? So with the rates dropping a little bit, does that affect builders at all? Does it work hand in hand or no?
I
I'm asking.
feel like
I genuinely don't know the answer. So I'm asking you guys like as if we're just hanging out, sitting at a table, talking. Literally.
construction loans are really different because the rates are always going to be higher anyway, since it's 12 to 18 month,
Yeah.
12 to 18 month bridge loan. So builders, I mean,
Doesn't affect them as much.
I mean, they could think whoever's actually, like I say, they're looking to sell the property after they build it.
Yeah.
It's more likely to sell now since more people will qualify for the loan. You have more potential buyers. So yeah, it's a return on their investment if they know, the market's picking up. There's more buyers out there. So.
Gotcha. But is DSCR like a little more like what program is the most like I guess?
Let's. You asked the question, but it wasn't. I don't think answered the way you needed it.
Okay.
Right. So when
No.
No, you had a great answer, but I think the audience has to understand what factors in a rate cut, because we correlate rates to a lot of times mortgages, right?
Yeah.
But if you really dive into when the Fed meets, it's based on what they call fiscal policy, right? So just giving you the ABCs of it is fiscal tightening, right? So when they combat inflation, it's taking money supply out of the market, tightening. So how do they do that? They raise the cost of things. So instead of spending $1 for something, you spend $1.50 for it. So they're pulling that out of the market. Now, historically, when the market is everyone's doing really good and has a lot of money, that's when rates creep up or they're stable. Sounds weird, but that's what they call tightening. Everybody's enjoying life. When the economy is doing bad, they need to pump life into it, which is capital. That's why if you remember in 2008, when the financial market collapsed, what they do? They started buying $20 billion worth of bonds, or trillion, don't quote me on that, in the bond market, because they had to prop up the economy so it wouldn't collapse. Same thing during COVID. That's why everyone says inflation was through the roof, as a lot of political pundits have been putting on the news, how inflation in 2025 was through the roof, and it's because of the president. You have to really see between the lines when that's said, right? Once again, this is not a political statement. We're talking about fiscal policy. The whole world was above 9% inflation. COVID wasn't just in America. It was an international crisis. Every country was pumping government money into their economy.
Yep.
Remember, countries were shutting down. Commerce was shut down. Transportation was shut down. Flow of money wasn't happening. Trade wasn't happening. GDPs were dropping because nothing was moving through the country. That didn't just affect America. And mind you, forget if it just affected us. We are the biggest consumer of goods in the world. If Americans aren't buying it, countries are going bankrupt. That's just the fact of it. Their own economies cannot sustain their GDP. So when you look at America and we stop consuming goods, there's a problem. Now, yes, America was above 9% during COVID, but the world was also. Because the world was shutting down. They were having the same problem. Fast forward to now. When you look at fiscal policy, once again, I'm not getting political. America is still at high inflation. Historically, we should be raised, even though people might not like this, historically, economics 101, interest rates should not be dropping because we should be seeing record employment and employment increasing. Not political when I say this. During the previous president, we were adding more jobs than we are now. We were actually losing more jobs than we were adding back then.
Not to get political.
Okay, I just have to put that disclaimer.
I blame AI.
Just someone catches me for that 2-second clip and post me on the internet. Look what Stanley said. I have to keep saying it.
Not to get political.
Not to get political.
You sure?
Exactly. Not to get political.
Do you guys think politics affects rate cuts at all?
I mean, I think so because depending on the administration, what's going on out there. There's a lot of pressure, on Powell, the head of the Fed right now, is a pressure from the government, who's in charge to lower rates because, if rates are lower, the idea is more people are buying houses, loans get cheaper, auto loans lower, the economy will jumpstart. But it's tough to do that now. Like Stanley mentioned, job reports haven't come out. They're probably not going to be great when they come out next week.
I don't know if they'll ever come out during this presidency. And once again,
I heard allegedly they're supposed to come out next week.
Not to be political. The Fed is always political to some degree because it gets appointed by the president, the Fed chair. Yeah. So let's be honest here. And we're talking about history, right? It gets appointed by the chair. And that chair comes in with certain views and certain opinions. But they're supposed to be a neutral branch. That's why there's other Federal Reserve chairs. At this point, there's been reported a major dissent. And the problem with dissent, which we haven't had before, people feel is politically motivated for favor. And the question that leaves us Americans, I think we should scratch our heads is, are people making the best decisions for us or for political gain? Because let's be it. Everyone says it, like the government goes in our pocket for every transaction. I don't care if you're Republican or Democrat. There's something you hate about the government. There's something they're not doing for you. There's something they're spending money on that you don't want spent on. That's all of us, guys. We're in the same car.
You know what's so insane that you say that, Stanley? And I have to give some kind of like pushback because
I want you to.
It's the deal room at that.
Oh my God.
Well, listen,
this is the dissent belt.
No, listen. The reason why I say I disagree with you, Stanley, is because does it matter why the hell they're doing it as long as they're doing it? At the end of the day, like that. That's hold on. That's
words matter. Words matter.
Words matter.
You said, does it matter why they're doing it as long as they're doing it?
I don't need you to repeat my question. Let me repeat the question, okay?
Okay.
Does it matter why they're doing it? Because they're doing it. And the reason why I say that to you, my brother, is because we're speaking about the average Americans, not people that are in it every day. Like, we are in this every day. You understand what I'm saying? I'm talking about Bertha in Alabama, who now sees that rates are going.
What, Bertha?
Shout out to Bertha out there.
Could have been Brittany.
Bertha in Alabama is trying to flip houses. Rates it down.
Little Bertha.
I don't think Bertha's gonna care if the Trump presidency has an angle or if anybody else has angles or any other brand. I don't think the average American cares. I think that all people see is rates are going down. It's time.
But it's like a tough
Joe,
line to walk.
Can I take that for 2 seconds?
Hey, go ahead.
Why'd you wink at them? Yeah. You trying to hide something from me? I'm here too. I'll watch it.
This is the problem with Daryl's logic. Listen to what he said. Bertha wants to flip homes.
Right? I thought that was going to sound way different.
Listen what he said. Bertha wants to flip homes. She doesn't care. That's what she wants. There's two parts of this that's messed up. Majority of America is living check to check. So you're talking about flip homes. They're trying to bring food to their kids. So flipping homes is a luxury, ladies and gentlemen. It's not the norm. The average American shops at Walmart, Store General, 99-cent stores. They're one of the biggest suppliers of goods in America right now. Yeah. Majority of America is not. Yeah, the majority of America isn't going to Saks Fifth Avenue, buddy. Majority of Americans aren't going to Bloomingdale. Majority of America aren't going to these chains. Majority of America goes to work, comes home, and then does it all over again. That's what makes America great, our middle class, right? Our middle class isn't flipping homes. They're trying to keep a roof over their head. So when we talk about the Fed chair and percentages, they don't care. They really care of the cost of eggs. Even though it becomes a big meme, it depends if they can have breakfast for everyone or if they're splitting eggs at home. That's America, ladies and gentlemen. So if we're talking about the backbone of America and you have farmers, the auto workers union, the plumbers, electricians, and plumbers, them bringing that check home, they don't have extra money to go put in Tesla. They don't have extra money to put in
watch how you speak about Tesla.
That's why
That's how you speak about
it's
that.
a double-edged sword, because let's say rates drop, all right, cost them, loans get a lot cheaper, people buying more cars, their credit card APR drops, everyone's happy in the moment, But then that raises inflation a couple years later. Like that's what happened with COVID. The rates dropped.
Time out.
And then inflation.
Okay, let's go. Okay.
Because you guys, and I don't even want to be like dramatic. You guys are absolutely fucking bugging out. And the reason why I have to say that.
Give me that.
Well. All right. The reason why I'm saying this is because, again, the average American here rates are dropping. Okay, let's flip it. The Fed raises rates. How's everybody feeling?
So your groceries may drop if rates are increasing and people are pouring money into the economy.
Historically, that means you never see rates go up if the economy's doing bad. It only goes up when it's going good.
Because demand is up, right?
The GDP is going up, employment's going up. All that is doing good. And if you think I'm lying, go to any community college or high school economics.
Shout out to Suffolk.
It's a seesaw effect, ladies and gentlemen. But let me pivot to what you're here for, right? Even though we can give this educational lesson. Get to a position in life where interest rates don't matter. If the numbers make sense, I do the deal. When I started flipping homes a couple years ago, I've been flipping homes for almost 10 years now.
I know it was like a couple.
And when someone's like, Stan, will you do the deal? Will you do the deal? My slogan, if the numbers make sense, I'll do the deal. I don't care about anything else. Tell me what I'm buying it for, how much money I'm putting in it, and how much I'm going to sell it. I don't care about anything else. Yeah. That's what people in our community should be thinking of deals. If you're in a situation where you're like, hold on, I can't buy the carton of 12 eggs. I need to buy the carton of 4. Your next mentality is, how the hell do I get out the situation where I have to ever make that decision again?
Do they have a 4-pack of eggs?
They actually do.
If
you go to bodega, you can buy one egg at a time in the freezer.
There's no bodegas in Arkansas.
I didn't say Arkansas. Damn, why'd you pick Arkansas? Shout out to my Arkansas people. I still love you.
You know
about
this
guy.
Arkansas, like Jose likes to say.
But let's look at it for a second, right? Because even my mom will probably hate me for the statement. I come from poverty. Like, I'm Haitian.
Shout out to Miss Julia. Yo, you know this.
Listen, I come from an era where you couldn't hide your own welfare with a debit card. You got a booklet that when you online, you ripped it off and you handed it and everyone saw that shit. They knew you were poor. You know what I mean? Or when you had, they would get, the government give you a white box, right? And it would outline in black the cereal. And then you would pour it in and it hit like bricks into the bowl. Then you would get powdered milk. I'm telling you, I'm keeping it real with my audience for a second. You would get powdered milk and you'd have to put it in a bowl and mix it with water. And you have cloud water. That was milk. Right? And I know some people here thank God, aren't in that situation, but growing up, it made me know what I never wanted.
What the fuck is Stanley was poor? Holy shit.
Yo, listen.
Powdered milk, is that carnation milk?
No, carnation's expensive. Carnation milk is expensive,
so
buddy.
you have milk like baby powder.
I don't know. Yep, definitely. You never know what was in it, right? But I say this to say this. My upbringing, I wouldn't change it because it gave me character and it shaped me. But I also say this, I'll never go back to that again. My kids won't ever be there. Now, when you think about Brokers Connection, when you think about Fund Rock, when you think about Lemate and the opportunity we're giving, guys, grab it by the horns. People talk about, the price of eggs. You should be like, people even look at the price of eggs? Like, I just want, you know what I mean? Like, maybe my bringing was different. Even though I'm a bring a controversial figure.
Oh no!
Here we go.
Diddy.
Cut this whole
no. Diddy said in this song. See, to you, it's a Bentley. To me, it's just a blue car, and that has always been ingrained in me. Of the
wait, until it's been what?
Ingrained in me.
You mean ingrained?
Ingrained in me to get to that level of, don't judge me. To get to that level of success, right? So, like, even with my kids, my wife would go, Max qualifies for this London, and I'm like, okay, if they want to do it, sign them up.
Easy.
I don't even ask how much.
Easy.
I don't.
Bro. Easy.
I don't worry if the check are clear.
By the way, ladies and gentlemen, Stanley has three beautiful kids, and I've never seen those kids with a frown on their face. 3 of the happiest kids that I've ever seen.
Thank you.
And I tell you something, like my sons, for some reason, like they be running around and they're like happy, and that makes me smile.
100%.
You know what I'm saying? Because my sons are even just cheering that they're happy, and that is definitely not some shit that I cheer about.
Oh, hell no.
When I was younger.
I'm gonna share a story with you during COVID, right?
Oh, man.
And please don't think I'm bougie, because once I heard the number, I was like, I almost fell out my chair. COVID happens, as you know, everybody's home, everyone's at the end of the earth. Everybody now, husbands and women work too, but whoever's the working spouse, which my wife works also, so let me get home and you have time to look at the bills. You have time. So now I'm looking at bills and everything, and all of a sudden, my kids went to something called safety swim. They've been going in swim classes since they've been 6 months. Now they're, of course, double digits. No, only one's double digits, but they were like close to 10 years old at the time. So I'm looking, and all of a sudden, my wife goes, "Oh, it's time to pay for another swim package." I'm like, "Okay, bet." How much is it? She says $5,000. I said, "What the?"
Was it Michael Phelps School?
Bruv. I said, "What?" I said, to jump in water, I'm paying $5,000.
Hold on, is that why black people don't swim? Because I was just trying to figure that out. Is that what's going on?
Yo, listen. I had my moment. Beeps catching bullets with their teeth. Beep, please. Like, I had my moment. I was like, listen, I learned
and taught the class.
What? Listen, I had the little when I was a kid, I had the little plastic pool in a little circle when it's hot outside, it burn you with the plastic. You know what I mean? The little place things, or go to a beach or something.
Do it in a little kiddie pool that survive.
Exactly. I looked at my wife. I said, "Hold on, we pay $5,000 a year." She's like, "No, we pay $5,000 per session." I said, "How long is this session?" She said 3 months. I said, "Oh, buddy, Jesus, this is a problem." I tried to talk out of it, but she's like, "What if you lose one of your kids to the ocean?" So I had to cough it out.
Stanley's son plays every sport. He plays Quidditch. He plays every
Stanley's son also has the #1 trainer on Long Island. I know Dave dropped.
Yo, stop talking too much, right? But my point being is, I've been blessed by of course, God, my family, support, my team to be able to do that.
Work hard, bro. Yo, don't shortchange yourself, bro. Yo,
no, I do, but
time out. Because here's what I gotta do. I gave Jose his flowers a couple months ago. Now you get your flowers. Yo, bro, you're on the phone with our team from 8 a.m. to like 10 p.m. every night to make sure that deals are moving, bro. There's a reason why you could afford what you could afford. There's a reason why you have X amount of properties in Detroit. You know, I know what you're doing over there. I know what you're doing, bro. You have X amount of properties in Detroit. Anytime that there's a market that's flourishing in the States, you're trying to get a pulse on it. You understand what I'm saying? So again, it's hard work, bro. There's a reason why you came from powdered milk to now you organic horizon. You know what I'm saying? Like, there's a reason. But we work hard, and you work hard, bro. So don't shortchange yourself when you're telling the story, bro.
What I'm saying is that
really poor. No dirt road. There was dirt roads in the country. Like, I know.
All day.
You know, I get it, bro.
But what I'm saying is that for the community themselves, they have opportunity that we didn't have. And I just don't want you guys to squander it. It's great being up here. It's great telling you about the community, but there comes a point where we got to step off the porch. Like, in, I think the last podcast we talked about being just an entrepreneur. People have there's been more millionaires made that work 9 to 5s at the same time than millionaires that just made it out of doing anything.
Yeah.
Think about it for a second. It could start from, listen, I have good credit. I'm a cop no matter where you are. Let me get a used car and put it on Toro. You know what I mean? I have a nice 9 to 5. Let me get a corporate condo and turn it to Airbnb. There's so many different hustles. Let me get a van, put a power washer in it. Also have a power washing company I do on the weekends. Don't let other people frame what it is to be an entrepreneur or limit what your side hustle could be.
Let me ask you a question, Stanley, really quick. Let me ask Joe first, because you're on a roll. In your opinion, Joe, his opinion, not a fact, and again, we're not getting political. It has nothing to do with politics. What, in your mind, what's your definition of an entrepreneur?
As an entrepreneur, there's no turning off the switch. I feel like Monday
Preach.
Sunday, you got to be on. Like you always have to think of your next play, because I think of an entrepreneur, you're not like buying food, you're hunting. Like imagine you're in the wild, you need to eat, you need to survive. Like you have to hunt all the time. You can't say I'm gonna take a break today.
What's the first animal you're gonna try to kill in the wild?
That's my son right there.
Like a musk, or an elephant from back in the day.
That's a musk.
Wait, from back in the day.
A tusk.
Oh, I'm thinking of Elon. My bad.
What's a tusk, guys? What's a tusk? A tusk is a thing.
The ivory.
What's wrong with y'all?
What are they called, man?
Ivory. No. No. Elephants have tusks too. That's why they get hunted.
I know, man, but
It's been extinct for years. Leave me alone. But anyway, a mammoth, use the fur, use the bones to build a little house.
Alright, so you're an entrepreneur, go kill mammoths and shit.
Oh
right?
my God.
No,
But piggybacking off of Joe,
Everybody.
when he talks about an entrepreneur.
Yeah.
That's what this is about. Listen, doing commercial mortgages and deals might not be your thing. Business lending might not be your thing. Revenue-based lending might not be your thing. But if this ignites you to look for your thing, we did our job.
Well,
Not join this podcast just because you want to be a mortgage broker, commercial mortgage broker. Don't come here because you want to just be a business broker. Don't come here because you just want to do business lending. Come here because you want more for yourself. Come here because you deserve more for yourself. Come here because you deserve a knock on your door from opportunity. Because you will put in the work.
and closed mouths don't get fed.
Hell yeah. One of my mentors,
Boulevard.
I have a mentor who does a tremendous amount of business, right? And I was getting so many gems from him. And he had this moment where he's like, he was like, just to talk over a half hour, $500, $1,000. I paid it. I was like, listen, I'm not with the fluff. I need to talk to the man. I'm the one that gets shit done. Stuff done. I apologize.
No shit.
Right? And we get on and we start talking. And he's like, you're not the average person I talk to. You really got a business. Like everybody wants to be an entrepreneur, but they talk to me about the beginning phases. How do I start? You're already telling me what you guys got going and you're going next level with it. And I was like, yeah, but I had to sit and talk to you to see if you were a fluff like everybody else. He's like, Stan, can I tell you a secret? I was like, what's up? People pay me every single month. And if I told you even 95% of these people ever log in my program once a month, I'd be lying to you. I'm lucky if 5% of the people that pay me every single month even go on my website portal.
Why do you now? Time out. The gem that you got from that is why would somebody pay X amount to receive information and then not click on the information to receive it?
Hunters.
They're not really about it. Yeah, they're not really hunting. They're not really searching for it.
So it's a facade. So they have just like a
Not facade. I won't download because everybody has their moment of growth. Listen, I have 3 kids. I have certain kids that learn readings quicker than other ones. I have kids that learn math later on. Everyone has their moment. But that moment, when you have it, you have to kill it. Not everybody's a hunter. It's life. Some people, you think about it, that CEO that you're like, oh, he's so great, I want to be him. His office is clean because of the janitor.
Do that one more time. All right, okay, bro. You good?
Like I said, that CEO, you walk in his office, the glass is clean, desk garbage, it's great. Oh my God, I want an office like that.
Corner office too, right?
He didn't make his office like that. The janitor that comes in at night did it. You know what I mean? That's who cleaned the office. When his coffee's set up and his notepad's in place, who guess what? The secretary did that. So when you see that success, there's other pieces that fall into it.
Yeah.
Not everybody's ready to be that guy. Sometimes the best position is the person behind that guy.
Oh.
You know what I mean? So when I say that to say this is when he tells me that, say a lot of people will watch and watch it like a TV and like, oh, this is the episode. But some people will take that information and capitalize on it. So do not think when you see these groups you jump into, mentorship, and like, oh, everybody's here getting it and I'm behind. Trust me, you're not.
Yeah, because just because the information is available doesn't mean that everybody has the information.
Or uses it.
Yeah. You know?
To really implement it. Yeah,
but yeah, because you know what? And Stanley, I guess you and I have like the same mantra. We just use different words because I just attribute it to whether somebody's a doer or not.
Yeah.
You know what I mean? Like, I've had plenty of scenarios in which I was like, you know what? I want to try to take art classes. I was not a doer. Okay. I was not a doer. I was just thinking that I wanted to be Pablo Picasso. You know what I'm saying? We all have we all fell into the lanes that we were, I guess, destined or built to fall into, but we didn't start in these lanes. I don't think you started off slinging mortgages. I don't think that you started off slinging houses.
No.
You know what I'm saying? And
That's
I
true.
definitely didn't start off slinging loans. You understand what I'm saying? Like my first job was I was working at a material testing factory to see if concrete was strong enough to support bridges in New York City. That was my first job.
Interesting.
That shit sucked. Okay, I had to be up at 4:30 in the morning. No. Okay, I'm not a 4:30 in the morning type of dude. Okay, I'm more of
He
like
gets in
a.
at 4.
Some days I'm more so show up to the office, get the guys riled up, and educate you on how to get funding. I'm more so of a show up and figure out how I can bridge you to funds. Whether you're a business owner, whether you're just Joe Schmo on the street that wants to start a business. That's my job. I know how to connect people to what they are trying to get connected to. I'm the bridge. I'm the best bridge. Just don't abuse me, okay? That's my skill. But we all fell into our lanes. But you guys just got to figure out what your lane is. Just fall into it.
I think a big thing, don't get caught up in analysis paralysis. I feel like people have these huge plans for their business, how they're going to go about it. But you just have to try things, like it's trial and error. You have to just attempt, do something, make a plan, go out there, put yourself out there, see what works. There's a lot of people.
I agree.
They're stuck in place. Like, I think I'm gonna do this next month. I think I'm gonna call this person. I think I'm gonna try to get these deals in. But you just have to put yourself out there and do it.
Just want to let you know, analysis paralysis was not written on his paper, all right? that was all from the top. You know what I'm saying? That we're flowing here. Joe, that was great. You were standing there dropping bars tonight. See, before you drop your next gem.
Oh my God.
No, hold on, seriously. I do want to say this because, we're speaking to an audience that's been with us for longer than a year at this point. Not everybody, but some of you guys, some of you ladies and gentlemen out there still are. And we appreciate every single one of you. Listen, being an entrepreneur is something that everybody wanted to do once the pandemic hit. You want to know why?
Oh yeah, that rush.
People's bills were being taken care of. I said this last episode, so I don't want to word salad this. People, their bills were covered for X amount of time, so they were able to be their most creative. And then everybody said, fuck work, I'm going to do my own thing. So everybody jumped into the entrepreneurship. But guess what happened when offices were opened back up? People said, let me go back to work. And that is fine, right? But here's what everybody still carried over.
We're frozen.
Frozen, yeah.
Fuck, I was dropping something.
Go, keep going. The mic's still on.
Promise?
Oh man, keep going.
So one thing that everybody kept with them is that still I can do it myself drive. That's why Stanley said people have different revenue streams. Listen, there's people that are working the 9 to 5 that are flipping homes on the side. There's people that are working 9 to 5 that are flipping cars. Are we not good? We are good. Great. Okay. They're flipping cars on the side. People seen that there was something else out there other than the 9 to 5. And guys, that's what the hell we're here telling you guys to do. We want to be your back office so that you can do something else other than the 9 to 5. If you guys are even slinging burgers at Burger King, shout out to 50 Cent. If you're slinging burgers at Burger King, that doesn't mean that you can't be flipping cars, flipping shoes, flipping business loans on the side. You're slinging burgers at Burger King, you see somebody coming in play with a black card, yo, boss, what do you do for a living? Oh.
You want to hear something funny?
Well, you can cut me off, but it's okay.
I'm sorry. You know what's funny?
Accept this in.
I don't know anybody's financial background that's in here, right? But look at it like this. Right now, you're looking at your financial situation. You're looking for more options, right? Because you're like, I don't like where my life is now. I deserve more. I want more, right? Some people will say, I'm not where I'm supposed to be in life. Financially, I'm struggling. Now, take that same situation, look in the mirror, and I challenge you to make that your superpower. And the reason why it's a challenge is, what the fuck do you have to lose? I'm already poor. I already don't have it. What do I have to lose? When you see that customer there that's a business owner and you walk by that business store, what do you have to lose by walking in that business saying, do you need business capital? What's he gonna tell you? No? You still don't have any money? What did I really lose? I walk by an open house and I see people outside. And I get out the car and go, does anyone need a mortgage? Let's say 20 people say no. Guess what? I still got my car poor. Nothing changed me. But I'll give you the flip side. You walk in the deli, shake a guy's hand. Listen, I know it's tough. Do you need capital for your business? I can get a check in your account in 24 hours. And guess what? He says yes.
Yeah, but we have to give some.
Whoa, I'm in my rhythm. Back the fuck up, Chicho. Right? Right? And he says yes. That's a check. You go to that open house and you're like, anyone need a mortgage? Anyone doesn't have a pre-approval? And someone looks around like, I'm not pre-approved. Guess what? That's a check. You have nothing to lose. You getting out that car or walking in that deli or that store doesn't make your income drop. You have nowhere to go but up.
All right, so now I have to interrupt.
All right, let him in.
First of all, Stanley.
My rhythm was on my inflection.
No,
Real quick. I got real quick. Let's add on to what he said. Like how you have nothing.
No, please, you can't add on to what he said. Stanley said
Give me
a couple
10
of
seconds.
No, he said a couple of. Stanley said, first of all, you're poor, you jump in a car. Said you're poor, you jump out of a car.
I
You're poor,
Finish.
you don't have a car. If you're poor,
You can have a bike.
you should go poor.
You can ride your bike past all the time.
That's one. Two, if you're buying a home and somebody is poor and comes on the street, don't give them money to buy a house. Because you're going to lose that.
All right, give me a second, real quick.
Don't
Real
buy a house.
there.
Oh my God. These guys messed it all up.
Quick. All right. So a year ago, I was taking an Uber to the train station.
Oh my God.
I started a conversation with the guy driving my Uber car. He says him and his friend are opening up a restaurant. They need business funding.
Yep.
Oh, I remember that.
I look at the credit report. They had a late October 2024. So I was like, listen, October 2025. Let's get back to this. Let's get you the funding. So I called them October 2025. They sold the restaurant, but his friend owns a tattoo shop not too far away from here. I just got him a $25K line of credit close to that. From a random conversation in the Uber. I could have just sat there silent, but I started talking to him.
Chill.
Had nothing to lose.
Yeah, exactly. And no, that shit wasn't random, bro. You put in work. Because a lot of other people have been in that Uber and just texted on the phone. You understand what I'm saying? So don't say, yo, what? Every time that's you out there home. Don't downplay your efforts.
He made his Uber money back.
Oh, and this guy does fix and flips. So we about to get him some more cash, and he's about to do some more property.
And guess how much that costed Joe? Nothing.
Nada.
He was still poor.
Yeah, no, so said, I took the Uber to the train and some 3 buses.
I was going to Brooklyn. All right, leave me alone. All right? I was going to a Ducky Fence.
If he didn't make the sale, he was still gonna be poor.
You know what? Listen, I love this new format of the podcast, right? Because it allows us just to be super authentic. Listen, none of this is scripted. Apparently, Stanley's been poor a very long time, and yeah, she's changed. All right, now for 1 good month.
One good month.
Yo, I didn't even know that powdered milk existed.
Oh.
That's some bullshit.
Right. If we're talking about this good month, Rye Guy closed his first deal this month. Yep, White Thunder.
Hey, where you at, right?
Hell yeah.
Hell yeah.
There it is.
Yo.
No, listen, ladies and gentlemen, we're gonna be wrapping it up soon. But if you ladies and gentlemen, took anything from tonight's episode, and then we're gonna jump into our final thoughts. If you took anything from tonight's episode, right, even through all the jokes and the playful banter, listen. And I don't want to say at the end of the day, because that's what all New Yorkers say. But at the end of the day,
the day will end.
It doesn't matter what you're doing right now currently. There's always another revenue stream that you can add. Real estate. Like I said, there's no millionaire in America that doesn't have real estate as a part of one of their revenue streams. Let's try to figure out what's going on in the market. Let's see if it's hot. If it's cold, I don't think it's ever really cold because, people, like Stanley said, always need a place to live. And if they can't afford to buy it, you can't get the financing on that end, trust me, people are always going to need a place to rent. People need a place to live. So is the market ever really down?
No.
No, because there's always a demand.
Opportunity.
And there's always a good deal out there. It's always, regardless of the rate, the moment, there might be a better deal at 7% than there was at 3%, depending on the purchase price.
Hold on. Let Joe repeat that. Let Joe repeat that. Joe just dropped the gem.
Yeah.
People don't realize he just
Might
dropped.
be a better deal at a 7% rate than if it was a 3% rate, depending on the purchase price and what it could sell for. So
The numbers are the numbers. If it makes sense, do the deal.
if it makes sense, it makes the dollars.
Exactly. That's the biggest gem for tonight. Even though I normally drop the gems, I think that should be the biggest. No, I'm being serious. Because we talk about cost of money a lot on this pod, right?
You said buy houses from a guy that's poor that has a car.
Listen. We talk about cost of money when it comes to business lending, right? We talk about interest rates, APRs, and stuff like that. But the reason why I want to focus on what Joe said is because the opportunity, if the deal is there, who cares if it's at 7%? If the numbers make sense. If you're grabbing an MCA and you're like, oh, my fact, doesn't matter. Is there opportunity? Why are you using the money for? Those are the things that you should focus on. You can say, oh, I want 5%, but I give you a 5% loan at the wrong time. What's it going to do? Sit in your bank account? You need capital now for a reason. No one takes a revenue basis to put in their account and let it sit for a month, 2 months. That's not why you take that loan. You take it because you need it now.
There's some kind of opportunity cost.
Correct.
And just like Stanley said, that premium that premium deal that works for you is not gonna be around for long.
No.
You think you're the only person on the planet Earth that knows that deal is a good deal?
There's more people with money right now in America than have deals. Trust me. Right now, I could say, yo, I have a flip right now that's going to net you $150,000. I will have 100 people giving me money for that deal. If you have a business plan where you're like, this is the business I think I can make money, there's people that have money that will invest. If you don't want people to invest, create your credit profile so then you can come to LendMe Capital and get business funding, personal funding. And then you're like, hold on, I see a fix and flip or DSCR. FundRock could give you the other end of it. 100% financing, and you just had to sign your name.
Question before we get into final thoughts, because I just thought of something great. Let's just say somebody out there that's a part of the community. Let's say somebody out there that's a part of the community has an opportunity or has someone that's looking to do fix and flips, but they don't know how to get started. Are they able to go ahead and refer that person over to us so that we can kind of give them the ins and outs and try to help them get their first deal done?
What I would say is that if you're in the community, drop a comment in the community saying that's something you want to do. And then we definitely schedule a segment so we can go off the ABCs of investing in real estate. I think that would be the best because we can give a wide net and give it to, I don't want to be selective on who we give it to. But also, I don't want to just give it to people, oh, my friend or my brother. Be part of the community. You guys pay monthly. This isn't something we're giving to everyone. Join the community. We'll set up a day that we could actually go through the ABCs of how to source a deal. What I do to find out if the numbers make sense. How to figure out comps. and the different safeties, tricks and trades I use to make what I make flipping homes. I don't mind giving that, but to my community. So if you know someone and you think someone could really benefit from this education, shoot them the link, your affiliate link, and tell them to join the community, and we could schedule something like that.
Bars. All right. Well, ladies and gentlemen, we are going to now, it's 8 o'clock. We know you guys have other things to do. So we're going to start to try to wrap it up here. Joe, you want to give us your final thoughts? Wrap everything up?
I thought it was a great episode. We all had great input talking about current events and whatnot. You know, trying to teach people how to go out and hunt, different strategies we all use. And we all are in the space that, you know, we're providing. Like, you know, my family, we invest in properties. I do all the loans. Stanley does fix and flips. Daryl's just the MCA guru. Everyone comes to him. Other shops come to him to do deals. So, you know, we're trying to share this knowledge with you guys so you could go out and make it happen as well.
Sand the man with the plan. 100 grand.
I think my thing is opportunities. The Fed's gonna do what they want to do. The president's gonna do what he wants to do. But it's up to you to find opportunities for you and your family, or just for you. Don't get hyped up into left, right, center, Republican, Democrat, or whatever the next man's doing. There's something our teachers taught us in school that I think is the most valuable lesson that I don't think we pay attention enough. Keep your eyes on your own paper. Every person's heard that in school. Use that as an adult. Keep your eyes on your own paper. And that one thing, I think, is a cornerstone of success.
Bars.
Keep your eyes on your own paper.
We had to write some raps from Stanley.
Yeah, I'm about to say, you gotta write an album.
Listen, we're about to cut this feed. I'm gonna start playing Jadakiss so loud. New York shit right now, but I'm gonna button this up really quick because again, we thank all you guys for tuning in with us this evening. We're about to blast the music in here because this was a fire episode. I'm fired up right now. I wanna
celebrate Right Guy. Right Guy closed his first deal.
Shout out to Right.
Behind Daryl.
What? No, next to me. Please, go next to me, please. Hell yes! In the chat. Hell yes!
Daryl closed.
The Feds dropped rates by 15 bips, just so you know. And as everyone is aware, just so you know, we can get those deals done, but the banks cannot. I tell you, go to Regis Bank. They cannot get it done. They won't even look at you based off your FICO, based off your cash reserves, your liquidity, your PFS statements. It cannot happen.
Let's go, baby.
Tell him, Ryan.
Ladies and gentlemen, I'm gonna take us out of here. Shout out to Rye Guy in the chat. He closed a deal that he's been working. He's been working.
My old bank could not do.
Yeah.
That his old company could not do.
Could not get it done.
And we were able to go ahead and get it done. Shout out to Stan for always keeping his ear to the ground. Trying to find new programs. Shout out to Jose for whatever the hell Jose does. And you always got to say shout out to the sales guy because at the end of the day, it takes his ingenuity to go ahead and get the deal done. Listen, closing deals, not every deal's a layup.
No.
Not every deal's a layup.
99% of them are not.
Especially if you think you're a layup and the deal dies at where you put all your eggs in one basket and you have to pivot. You got to move banks. You got to get different approvals and stuff changes. There's a lot that goes into closing a deal. That's why every time a deal goes ahead and closes in our office, we always throw like a big little, not a party. It's just like celebration because some people have never closed anything a day in their life besides a door.
And we take pride in that.
You understand what I'm saying? So every deal, whether it's a small deal, a big deal, we cherish every deal we get done because now we've made a client for life because we can put them into other programs from wherever they came from. But now we get to my final thoughts.
Not only that, shout out to just Paul B. Why is he with us instead of Kiavi? Because we got the deal done.
Shout out to
Let's go, Paul B.
Shout out to Paulie B.
Just saw Little John, of course, with the Walnut Street.
Yep.
Shout out to Walnut Street. But ladies and gentlemen, listen, I'm going to go ahead and take us out of here. The Fed, again, let's just try to, button everything up. The Fed cuts rates. Thanks, Stanley. The Fed cuts rates because they're trying to stabilize the economy before things slow down. Too much sometimes, good news does come with, with signals. And if you understand the signals, you can make smarter moves more than 95% of Americans. Ladies and gentlemen, my name is Darryl Mills, aka El Mágico Radical. We have any outro music? Not this
And
evening.
think of the long-term play. Never forget, 30-year term, there's a reason. It's a long-term financial play.
Again, ladies and gentlemen,
We on SNL. We on the stage like, yo, great night. Everyone's like, yo.
listen, my name is Darryl Mills, aka El Mágico. This is Ryan Guy. Close a very troublesome deal today. Thank God we got it done. Joey G, you just see them on the camera. And shout out to the Haitian sensation, Stanley Julian, aka Sexy Chocolate. Ladies and gentlemen, I will leave you with this.
Without that man.
A wise man once said, never give up. Never surrender. Shout out to Buzz Lightyear. Ladies and gentlemen.
The Deal Room.